Hello everyone. Today we are going to talk about a very interesting share which is Shree Digvijay Cement Corporation Limited. Now, this is a share which is listed at 71.40 rupees with everything in green, which is the current price is less than the intrinsic value. The PE ratio is 19.02, which is quite good. Stock has been generating better return on equity. Good time to consider as it is not in the overbought zone and there are no red flags as well. Also, the probability of default is less, and if we can see, the market capitalization of this share is 1026 crores. The net income is around 53.97. Total debt is quite less. If we look at the long-term opportunities, which is in the 1 year 23.53% return, in 5 year horizon it has given 322% return, and since inception, that is August 2019, the capital has appreciated to 322.49%. So at less than 100 rupees, just 71.40, this is a good stock to consider, especially after the government push towards infrastructure. Now the government has already declared its plan to increase the spending over infrastructure in the country through different projects, and Digvijay Cement can play a very important role in that growth. If you look at the forecast, it is quite good. If you look at the financials, the total revenue has increased. The net income has slightly decreased. It could be due to COVID. Earning per share is almost constant. Also, the company pays a good dividend. We will see how much dividend it has paid. Total asset 431.68 crores. And if we look at the cash flow, it has positive cash flow 67.02, which is really good sign as compared to peers. It is at a very good valuation, and the dividend yield is also the maximum if we see the other cement companies, right? So this is a great sign, and you can definitely hold this share for long-term perspective. The total promoter holding is around 56.19, which is considerably good. Pledge promoter holding is insignificant. So this is how things have been working out for Digvijay Cement. Also, different analysts have suggested to hold this share in your portfolio. Now let's look at the dividend payout in 2021, which is around 4 rupees. A good dividend payout, and which is really nice. So if I have to give you a suggestion to invest your money in this share, I would suggest you to do that on the basis of your own analysis. Return on capital employed is good. Profit growth percentage is good. Sales growth percentage is really nice. The cash flow is good. Dividend was 35.6 crores. Debt is almost negligible. So these are really good numbers, and if we see the maximum chart, there is a really nice upward growth trend which it is showing. The company is almost debt free. The stock is providing good dividend yield of 3.49. The company is expected to give a good quarter. It has delivered good profit growth of 48.17 compounded over last 5 years, and company has been maintaining healthy dividend payout. So promoter holding has decreased. This is an area of concern. Also, the company has delivered sales growth which is not quite good as compared to the other partners. However, for long-term perspective, it's a good investment to make. Let's quickly look at the annual report. Now, it's under the name of Kamal Cement since 1944, so it's a long-term company. Now, this is the 76th annual report. Shree Digvijay Cement, trusted building material organization creating value for stakeholders through excellence. Over the last 76 years, strive untiringly in our own humble way to create long-term value through customer delight, empowering people and building trusted partnership. So the values of this company is represented through unity, through the people, responsibility, ethics, sustainability and innovation. The company overview, if we look at the financial statements, this is what has been written. As we move into another year, we have miles to walk, no complacency, eyes on the ground, and with our cement plant now ready to meet increased demand of Kamal Cement, we are looking at the current year with greater optimism. We are also preparing ourselves for a growth in future. So this is really nice. Also, we are today among the best operating cement plants, and the proof is before you. For the last quarter ending 21, we earned EBITDA of over 1400 per ton of cement. It is indeed one of the best in the class. So the team is good, positive approach, and the turnover has crossed 500 crores, highest EBITDA of 111 crores. So this is something which is a good sign in the company. Obviously, the forward-looking statement by the managing director, the executive chairman. These are the board of directors of the company. And let's quickly look at some of the important numbers. So profit before tax. Let's look at profit after tax. So it has considerably increased over the period of time. So this is now a profit-making company. Earning per share is also increased. The dividend payout is good. Fixed asset is quite good. If we look at the key financial indicators, contribution to the exchequer, it's the maximum in 2021. Revenue growth has been quite good. Earning before interest, tax and deduction, 11,137 crores. This is EBITDA per ton of cement production, profit before tax, and this is profit after tax, which is good. Return on equity is also nice. Return on capital employed is 28%, which is quite good. Net worth has increased from the last financial year to 31,000. Capital employed is 32,395. The current ratio is 2. Account receivables has decreased. Fixed asset turnover ratio has increased to 2.6. So a good positive perspective from the company. Overall, the company is doing good, and also it's at great price available in the market. So if you're looking for an investment of more than 10 to 20 years down the line, this could be a good stock. Also considering the growth momentum of India in terms of infrastructure sector, this is going to be a great pick.